Are you listening?
Yes.
It's confirmed. I'm not supposed to be calling you.
I know.
Do what you have to do.
This was the call that brought down a billionaire. 23 seconds after a Goldman Sachs board meeting ended, a member made a call, adding millions to his friend's pocket overnight. This conversation was never supposed to happen, but it was recorded. It was one of thousands intercepted by the FBI over a year, without anyone knowing. The man who built a $7 billion hedge fund empire on secrets didn't know the most important one. Someone was listening. But what drove the government to wiretap a Wall Street titan like a mafia boss? And how did he convince CEOs and senior partners to betray everything they stood for? This is the insane story of the Sri Lankan immigrant who built the largest insider trading ring the financial world has ever seen. On a summer evening in 2007, a yacht glides around Manhattan as the sun sets behind the skyline. On deck, some of Wall Street's most powerful investors sip champagne while Kenny Rogers performs a private concert. The man who arranged it all stands among them, smiling, a billionaire hosting friends on a boat named after ancient treasure ships. This was the world Raj Rajaratnam had built for himself. A few years later, Forbes would rank him number 559 among the planet's wealthiest people, his fortune estimated at $1.3 billion. He owned a luxury apartment on Sutton Place, a vacation property at the Setai in Miami's South Beach, and a reputation as one of the sharpest minds in finance. He donated millions to tsunami victims, wrote checks to Barack Obama and Hillary Clinton, and co-founded charitable organizations that stretched from New York to New Delhi. The son of Sri Lanka had conquered America. But to understand how far he climbed, you have to go back to where he started. Rajakumaran Rajaratnam was born on June 15, 1957, in Colombo, the capital of Sri Lanka, into a wealthy Tamil family that expected greatness. His father chaired Sri Lanka Singer, a local branch of the famous sewing machine corporation, and young Raj grew up as the second of 5 children in a household where achievement was the baseline. He attended the prestigious St. Thomas Preparatory School, then left for England as a teenager to continue his education. He earned an engineering degree from the University of Sussex in 1980, then crossed the Atlantic and enrolled at Wharton, one of the most elite business schools in the world. He earned his MBA in the early 1980s and arrived in New York City, hungry to prove himself. He joined Needham & Company, a small investment bank that specialized in technology stocks, at exactly the right moment. The personal computer revolution was transforming American industry, and investors who understood where tech was heading could make fortunes. Rajaratnam understood it better than almost anyone. He studied the sector obsessively, cultivated relationships across Silicon Valley, and developed a reputation for seeing opportunities before others noticed them. By 1991, he was president of the firm, barely into his mid-30s and already running the show. But running someone else's company wasn't enough. In 1997, at 40 years old, he walked away from Needham to start his own investment fund. He called it Galleon Group, named after the massive ships that once carried gold and spices across oceans. The fund launched with a few $100 million. Within a few years, it managed over $7 billion. The return seemed almost supernatural. Galleon rode the dot-com boom, navigated the crash that followed, and emerged stronger than before. Rajaratnam's bets on technology and healthcare companies paid off with stunning consistency. He got married, raised 3 children, and moved through the upper tiers of Manhattan society with the ease of someone who belonged there. To the world, he was living proof that brilliance and hard work could take you anywhere. The immigrant who mastered the American game. But beneath the admiration, there were whispers. Some investors who sat across the table from Rajaratnam walked away unsettled. They described the atmosphere in meetings as strange, intense, charged with something they couldn't quite name. One later admitted he avoided Galleon entirely because he sensed that not everyone there was an honest person. Rajaratnam heard the skepticism. In 2008, he complained bitterly to an associate. "People say I don't really understand the markets and all that." He dismissed it as jealousy, the resentment of lesser men watching someone win. He had the track record. He had the billions. He had the reputation. What he also had was a secret, a network of friends, former classmates, and corporate insiders feeding him confidential information before it ever reached the public. The trades that looked like genius were theft, and the machinery behind that theft was far more elaborate than anyone yet knew. On Wall Street, everyone chases what they call edge, the informational advantage that lets you move before the market knows what's coming. Most investors find their edge through research, analysis, and intuition. Raj Rajaratnam found his through friendship. He built a web of personal relationships, woven over decades, that he could pull whenever he needed secrets. Old classmates, business contacts, people who owed him favors, people who trusted him. He turned that trust into a pipeline of confidential information flowing straight into Galleon's trading floor. Enter Anil Kumar. He and Rajaratnam met in the early 1980s as MBA students at Wharton, and their friendship survived the decades that followed. By the mid-2000s, Kumar had risen to become a senior partner at McKinsey, one of the most influential consulting firms in the world. Here, he advised some of the biggest technology companies and helped with some of their most sensitive decisions. In 2006, one of those clients was AMD, which was secretly negotiating to acquire a graphics company called ATI for $5.4 billion. Kumar knew the details, and he told Rajaratnam. Galleon bought ATI shares before the deal went public, and when the announcement hit, Rajaratnam walked away with roughly $20 million in profit. Weeks later, Kumar visited him at home. Rajaratnam handed him a check for $1 million, a thank you gift funneled into an offshore account under Kumar's wife's name. And he kept providing these tips. The two families vacationed together. Rajaratnam became the godfather of Kumar's son. The friendship had become something else entirely. Then there was Rajiv Goel, another Wharton classmate who worked as an investment manager at Intel Capital. Goel had access to Intel's internal forecasts, and Rajaratnam cultivated him carefully, hosting his family on trips to Paris and Disneyland, helping pay for his daughter's fertility treatments. In April 2007, Goel called with a tip. Intel's quarterly earnings were going to beat expectations. At the time, Galleon held a short position on Intel, which simply meant betting the price would fall, not rise. Rajaratnam immediately reversed course, buying 1.72 million shares. When Intel announced its results and the stock jumped, Galleon made $36 million in 3 days. But no one embodied the network's methods quite like Danielle Chiesi, a former beauty queen from upstate New York, Miss Southern Tier Teenager 1981. Chiesi had transformed herself into a hedge fund analyst with a particular talent for extracting secrets. Her technique was seduction, sometimes literally. She carried on an affair with Robert Moffat, a senior vice president at IBM, considered a leading candidate to become CEO, and he fed her forecasts and details of potential acquisitions. She also cultivated a relationship with Hector Ruiz, the CEO of AMD, who shared confidential plans about spinning off the company's manufacturing division. She had another source inside Akamai who warned her before earnings announcements. Chiesi was blunt about her methods. In one recorded conversation, she said, "If you didn't talk to the senior at AMD and you didn't have Moffat at my house last night, then who the hell would buy the stock?" In another, terrified her activities might leak, she told a source, "I swear to God, if you talk, send me to prison. I'll be like the Martha Stewart." Another member of Rajaratnam's network was Rajat Gupta, the most prestigious name of all. He had served as the worldwide managing director of McKinsey, sat on the board of Goldman Sachs, and counted Bill Gates among his friends. His reputation was built on decades of impeccable integrity. He and Rajaratnam shared a bond as successful South Asian immigrants, and they discussed launching a fund together. What Gupta could offer in the meantime was access to the boardroom conversations of one of the most powerful banks in the world. He would become the network's most damaging source. and the secrets he passed would shake Goldman Sachs to its core. This was how Rajaratnam operated. He didn't threaten or coerce. He befriended, helped, flattered, and repaid. The people around him described feeling indebted to his generosity, unable to refuse when he asked for something in return. By the time they realized what they'd become, they were already in too deep. The network was complete, the money was pouring in, and none of them understood how close they already were to destruction. The mechanism worked like this. A tip would come in, a phone call, a meeting at a conference, a quiet word over dinner, and within hours, sometimes minutes, Galleon would move. If the information pointed to good news, they bought shares before the announcement. If it pointed to bad news, they bet against the stock. The key was timing. Get in just before the world found out, then ride the wave as everyone else reacted to what you already knew. To disguise the pattern, Rajaratnam mixed these trades with legitimate ones, burying the illegal bets inside a mountain of ordinary market activity. Galleon employed analysts who produced real research, giving Rajaratnam cover to claim that his insights came from what he called a mosaic of public information. The recordings would later prove otherwise. September 23, 2008 was one of the darkest days of the financial crisis. Banks were collapsing, markets were in freefall, and Goldman Sachs was fighting for its survival. That afternoon, the Goldman Board of Directors held an emergency phone call to approve a lifeline. Warren Buffett would inject $5 billion into the company, a vote of confidence from the most respected investor in America. The call ended. 23 seconds later, Rajat Gupta dialed Raj Rajaratnam. In a call that would later be revealed to have been recorded by the FBI, Rajaratnam is heard telling a colleague, "I got a call at 3:58 that says something good may happen to Goldman." Before the market closed, Galleon bought 215,000 shares. The next morning, when Buffett's investment was announced, Goldman's stock surged. Rajaratnam pocketed roughly $840,000 overnight. A month later, Gupta leaked again. Goldman was about to report a quarterly loss instead of the profit analysts expected. Rajaratnam, recorded on a wiretap, told a colleague, "I heard yesterday from someone who sits on the Goldman board that they are going to lose $2 per share, when the street thinks they will earn." He traded on it and made another $700,000. The Akamai trade showed how fast the network could move. On July 24, 2008, Danielle Chiesi received a phone call from her source inside the company warning her that Akamai was about to lower its earnings guidance. That evening, she called her boss, Mark Kurland at Newcastle, then Rajaratnam. "They're going to lower guidance," she told him. "I just got a call from my guy." The next morning, both funds bet heavily against Akamai. Newcastle sold over 300,000 shares, Galleon nearly 400,000, and bought put options, essentially insurance policies that pay out when a stock drops. 6 days later, Akamai announced bad news. The stock dropped 25%. Together, Galleon and Newcastle made over $6 million in a single week. But insider information couldn't beat a collapsing market. In the fall of 2008, Chiesi got word that AMD was planning to spin off its manufacturing division and receive $1 billion investment from an Abu Dhabi fund. The network loaded up. Newcastle bought over 300,000 shares, Galleon bought 2.5 million shares plus options. On October 7th, AMD made the announcement, and the stock rose 8%. It should have been another windfall. Instead, the 2008 market collapse erased the gains entirely. Newcastle lost $270,000, Galleon lost $23 million. Through it all, they tried to cover their tracks. They spoke in code, and Chiesi met her sources in hotel rooms, at bars, even at her mother's house in Connecticut. In one recorded call, she told Rajaratnam, "I'm glad we're speaking on a secure line." He replied, "I never call you from my cell phone." In another conversation about a pending deal, Rajaratnam instructed his colleagues, "We need to keep absolute silence on this. Don't tell even your little friends." He even discussed creating fake email trails to give their trades a veneer of legitimacy. They believed they were untouchable. In one recording, with AMD shares falling and the market turning against him, Rajaratnam declared,
"I am a warrior. They can't kill me. October is my month."
What he didn't know was that someone had already started talking to the FBI, a woman who decided she'd rather confess than go to prison. And she knew everything. The thread that unraveled everything was a single text message. In 2006, a young SEC attorney named Andrew Michelson was assigned to examine trading activity at Galleon. He and his team noticed a pattern. The fund kept making large bets on stocks just before major announcements, and those bets almost always paid off. Michelson began matching phone records to trade logs, lining up calls with market movements using what he later described as piles of documents and a ruler. The work was tedious, but the picture it revealed was damning. Rajaratnam seemed to know things before they became public. The question was how to prove it. Then, buried in hundreds of thousands of records, Michelson found what he was looking for: a text message from a woman named Rumi Khan to Raj Rajaratnam. It read, "Don't buy Polycom until I check the forecasts." 8 words that exposed the entire operation. At that time, Rumi Khan was already known to the FBI. In 2001, she had pleaded guilty to passing insider information from her job at Intel to a hedge fund. The government gave her a light sentence, hoping she might be useful someday. Now, with the text message in hand, they had their leverage. In November 2007, FBI agent BJ Kang knocked on her door in Palo Alto, California. When she saw the badges, her heart sank. She knew exactly why they were there. Kang showed her the message. Khan later recalled, "When they showed me the text, I understood that everything was lost." She broke almost immediately. Over the following weeks, she became what investigators called a walking encyclopedia of the insider trading world. She explained the code words, the social networks, the concealment methods. She even agreed to wear a wire and call her former associates while the FBI listened. What Khan gave them was enough to do something unprecedented. In March 2008, federal agents began wiretapping Raj Rajaratnam's cell phone, the first time in American history that a Wall Street executive had been surveilled like a mob boss. For an entire year, they listened. They recorded thousands of calls, and in those calls, they heard it all. Rajaratnam discussing tips from Chiesi, receiving leaks from Gupta, instructing colleagues to keep secrets, boasting about his sources. By September 2008, the wiretap had expanded to include Chiesi's phone as well. The evidence was piling up, and the targets had no idea. In October 2009, Rajaratnam finally sensed something was wrong. While vacationing in Miami with Anil Kumar, he mentioned that a former Galleon employee might be cooperating with the government. From now on, he warned Kumar, use a prepaid phone. It was too late though. The FBI had been listening for over a year. They had everything they needed. On the morning of October 16, 2009, at 6 o'clock, FBI agents arrived at Rajaratnam's apartment on Sutton Place. They found him in bed and placed him under arrest. Across New York and New Jersey, simultaneous raids swept up Danielle Chiesi, Mark Kurland, Anil Kumar, and Rajiv Goel. By afternoon, the famous perp walk photographs were everywhere. Rajaratnam, in a blue jacket and greenish sweater, looking stunned and gray, led past cameras in handcuffs. Chiesi, her blonde hair pulled back, stared at the ground. The images signaled something new. Even billionaires could be hauled out of bed like common criminals. That afternoon, U.S. Attorney Preet Bharara held a press conference. He described the case as the largest insider trading conspiracy ever prosecuted. And then, he delivered the line that would define the entire investigation. They thought they knew a lot of secrets, but there was one secret they didn't know, that we were listening. 2 weeks later, a second wave of arrests brought down Zvi Gopher, a former Galleon trader who had built his own insider network, and his associates. By the end of the year, 14 people faced criminal charges. Most of them would plead guilty, but Rajaratnam refused to make a deal. He would fight. On October 16, 2009, Raj Rajaratnam was released on $100 million bail and confined to his Manhattan apartment with an electronic monitor strapped to his ankle. His lawyers urged him to take a plea deal. Almost everyone else had. 19 of the 26 people charged in the conspiracy admitted guilt rather than face trial. Danielle Chiesi held out until January 2011, then folded, pleading guilty to 3 counts of fraud. But Rajaratnam still refused. He hired John Dowd, a legendary defense attorney who had represented Senator John McCain. He believed he could win. The trial began in March 2011 in the federal courthouse in Lower Manhattan. For 7 weeks, the jury heard evidence that painted Rajaratnam as the architect of an unprecedented criminal network. 45 recorded phone calls were played in the courtroom. Rajaratnam's own voice discussing tips, instructing secrecy, celebrating his sources. The prosecution displayed a chart showing the faces of 16 people he had corrupted and listed at least 20 companies from which he had stolen information. The star witness was Anil Kumar. He sat on the stand for more than 8 hours, describing how his friendship with Rajaratnam had turned into something criminal. He told the jury about the $1 million check, how he almost fell off his chair when he saw it, how the money was hidden offshore. He recalled Rajaratnam calling him after the ATI trade, excited. "They're cheering for you in our office." Kumar said those words made him sick. "I imagined them opening champagne," he testified, "and it worried me greatly." Rajiv Goel followed, recounting the intel leaks, the family vacations, the BMW keys Rajaratnam handed to sources as thank you gifts. Lloyd Blankfein, the CEO of Goldman Sachs, took the stand to explain that the information Gupta leaked could only have come from the boardroom. The defense argued that Rajaratnam was a brilliant analyst who built his trades on a mosaic of public information. His lawyers attacked the witnesses as criminals trying to save themselves. They insisted the recordings were ambiguous, the trades explainable. Rajaratnam himself never took the stand. On May 11, 2011, after 12 days of deliberation, the jury returned its verdict: guilty on all 14 counts. One juror later told reporters, "I wanted to believe he wasn't guilty because his life story was almost like a success fairy tale. But in the end, the evidence was decisive." 5 months later, Rajaratnam stood before Judge Richard Holwell for sentencing. Prosecutors demanded up to 24 years, calling him no better than a bank robber. His lawyers begged for mercy, citing his philanthropy and his failing health, advanced diabetes, kidney failure, dialysis 3 times a week. They submitted over 200 letters from friends and family describing his generosity. When the judge asked if he wished to speak, Rajaratnam replied, "No thank you, Your Honor." Holwell was unmoved. "A serious illness," he said, "is not a get-out-of-jail card." He sentenced Rajaratnam to 11 years in federal prison, the longest sentence ever imposed for insider trading, plus a $10 million fine and forfeiture of $53 million. The others received their judgments too. Rajat Gupta got 2 years. Chiesi received 2.5. Zvi Gopher was sentenced to 10. Kumar and Goel, the friends who testified against Rajaratnam, received only probation. An FBI agent later recalled that on the morning of the arrest, he asked Rajaratnam if he had saved for his children's education. Rajaratnam replied, "Don't worry, I have plenty of money. My kids will be fine." Even at the end, his confidence never wavered. Rajaratnam served roughly 7.5 years before his release in 2019. In 2021, he published a memoir claiming he had been unfairly targeted, that prosecutors made an example of him, while bankers who caused the financial crisis walked free. Few were persuaded. His name had become synonymous with Wall Street greed and the hubris of men who believed the rules didn't apply to them. The case transformed financial enforcement. Wiretaps became a standard tool. The SEC created a dedicated insider trading unit. Hedge funds overhauled their compliance programs. The message Preet Bharara delivered on the day of the arrests echoed through the industry for years. No one is above the law. And it all began with 8 words in a text message. "Don't buy Polycom until I check the forecasts." That brought down a billionaire. If the Galleon scandal felt wild to you, wait until you see what happens when a group of desperate Koreans manage to unite an entire nation against the financial markets. Millions of people, that's much harder to stop. Click the thumbnail on screen, and I'll see you there.